Good morning, everybody. Welcome to your next session of Audit and Assurance. We've completed about 6 sessions now, and this is our seventh session. There are totally going to be 10 sessions. So, this is the seventh one, and we're going to have 3 more, and we will complete the entire Audit and Assurance portion. So, what did we do yesterday? If you remember, yesterday we had done the chapter number 7. What did we do in chapter number 7? I told you chapter number 7 is an important chapter from the perspective of your understanding of the subject and from the perspective of the future chapter called procedures. And what was chapter 7? It was about audit evidence. It was about audit evidence. What did we see in that chapter? We said in that chapter that the audit evidence should be how? It should be sufficient and appropriate. Right? Your audit evidence should be sufficient and appropriate. Then we went on to see the sources of audit evidence. What are the different sources? We said test of controls is one source and substantive procedures is another source. For substantive procedures, I had given you an acronym to remember all the substantive procedures. What was that acronym? What was that acronym for substantive procedures? Does anybody remember? I hope everybody remembers. It's an important acronym for substantive procedures. Substantive procedures are also called audit procedures, right? So remember, substantive procedures. Substantive procedures are again broken down into two, test of details and analytical procedures. But for all the substantive procedures, I had given you an acronym. What was that acronym? What was that short form? Yes, good, Sharon. So Sharon says RIO-CAR, right? RIIIOCAR. That was the acronym for substantive procedures, right? What was R there? R was recalculation. What was I? I was inspection of records or documents. Another I, inspection of tangible assets. Another I, inquiry. O, observation. C, confirmations. A, analytical procedures. R, reperformance. First R is recalculation. The last R is reperformance. Remember all of these procedures. Remember all of these procedures. RIO-CAR. Correct? In this RIO-CAR, except analytical procedures, if you remove analytical procedures, the rest of all the procedures are called what? They're called test of details. They're called test of details. All right. After substantive procedures, what did we see? We saw assertions, the financial statement assertions. What was the acronym that I gave you for assertions? What is the acronym that I told you to remember? I want everybody to answer this. These are important things. If you don't remember these, then you must have not heard yesterday's class. We've spent so much time discussing what are the assertions, what are the substantive procedures. What's the short form for financial statement assertions? What's the acronym for that? Nobody? That's shocking. Yes, good, Apeksha. Apeksha says for account balances, it was CWOP. For account balances means what? For balance sheet items, it was CWOP. CEAVOP. CEAVOP. I'm shocked that nobody's answering. Have you guys not written down that in your notes? Because these acronyms are not going to be there in study text. These acronyms I have made for you. These acronyms are not going to be in study text. These acronyms I have made so that you easily remember things. So for account balances, it is CWOP. CEAVOP. What is C there? Completeness. What is E? Existence. A, accuracy. V, valuation. O, rights and obligation. And again, P, presentation and classification. That was CWOP for account balances. Then for P&L items, which is transactions and events, completeness remains the same. Existence becomes occurrence. So completeness, occurrence, accuracy remains the same. Valuation, there is no point here in valuation. O becomes cutoff, and P remains the same, presentation and classification. So completeness, accuracy, presentation and classification remains the same. What changes? Existence becomes occurrence. Valuation is not there in transactions and events. Existence becomes occurrence. Valuation is not there. And O, which is rights and obligations for accounts balances, that becomes cutoff. I hope you remember what is cutoff. Okay, that we saw. Financial statement assertions. Then we saw sampling. How do you sample? We saw two methods: statistical sampling method, non-statistical sampling method. Correct? Under those two methods, we again saw different kinds of methods. Under statistical sampling method, we had seen three methods. What were the three methods under statistical sampling method? Do you remember? Do you remember what were the three methods? Random sampling, systematic sampling, monetary unit sampling. Random sampling, systematic sampling, monetary unit sampling. What was random sampling? Listen very carefully. What was random sampling? Using your random number generators or random number tables. By using those, you were selecting certain items. That was random sampling. Then there was systematic sampling. What was systematic sampling? The first transaction you are randomly selecting, then you are selecting every 20th transaction or every 50th transaction. So every nth transaction, if you're selecting, that's called systematic sampling. That is called what? Systematic sampling. Then there's monetary unit sampling. What does monetary unit sampling say? Every nth dollar, like every $100th or every $200th or every $1,000, if you're selecting transactions based on the monetary unit, then it is called monetary unit sampling. So every $100th or every $50th and high value items will be selected. There'll be higher chances of higher values getting selected in case of monetary unit sampling, right? So under statistical sampling method, there's random sampling method, there's systematic sampling, there's monetary unit sampling. Under non-statistical, there were two. What were non-statistical methods? One was haphazard. Haphazard is without using any structure or technique. The other is block. Haphazard and block selection. Block was what? Selecting two items side by side. Right? Okay. Then we saw using the work of others. Under using the work of others, we had seen experts already. We had seen internal auditors. Right? Under using the work of others, we had seen experts, that as an external auditor, you sometimes use the help of experts, and we had seen internal auditors. Now, we're going to go to the third type of expert, which is auditors of service organization. We're going to go to the third type of expert, which is nothing but auditors of service organization. So let me open the slides for you. 1 second. Yes. So see, what are service organizations? What are service organizations? Have you heard about BPOs? Have you heard about business process outsourcing firms? BPOs. What does these BPOs or what does these service organizations do? Anybody has any idea? These business process outsourcing firms, these BPOs or these service organizations, what do they do? What's their job? Any idea? No, no idea. Listen carefully. What is service organization or what's a BPO? Listen carefully so that you don't, forget what's happening. So as the words are suggesting, BPO, business process outsourcing. So what are you doing? The companies are outsourcing one specific business process to another company for to be processed. That particular business process will be processed by that other company. They're outsourcing that work. For example, for example, let's say there's a big chartered accountancy firm. Let's say there's a very big chartered accountancy firm. Let's say for example, let's take Deloitte. So let's say Deloitte. Now Deloitte will have various departments, right? It will have a human resource department. It will have a payroll department. It will have an information technology department. It will have a marketing department or sales department. So there will be various departments in Deloitte. Now, Deloitte wants to, let's say, outsource their HR function. The human resource function, the human resource department, they don't want their own employees to be in HR department. They want human resource department to be handled by some outside organization. So they will outsource this human resource department to that outside organization, and that outside organization will then take care of our human resource. The human resource department, the job, the responsibilities of human resource department will now be done by whom? It will be done, the jobs and responsibilities will be done by that outside firm to whom the human resource department has been outsourced. And for doing so, they will, of course, charge fees. For doing this, for handling the human resource department of Deloitte, this outside firm, which is called service organization, this service organization will charge some fees from that particular company, from Deloitte. Correct? This is the concept of business process outsourcing or service organization. In most of the companies, a very generic or a very general department which is outsourced is information technology, IT department. What do? They outsource IT department to an outside company, like let's say Infosys or let's say IBM. They will outsource the information technology department to Infosys, and then Infosys will take care of the entire IT, IT related things of this particular company of Deloitte. Correct? And Deloitte will have to pay some fees, of course, to Infosys for doing this job for them. So this is what? This is nothing but outsourcing of a business process. Information technology is a business process, right? It's a department, it's a process of business that is being outsourced to Infosys. And then in that case, Infosys is called service organization. Infosys is then called what? It is called service organization, right? One of the examples that I want you to keep in mind while reading this particular part of the chapter is, let's say a company has outsourced its receivables department to an outside firm. What has happened? The company, let's say ABC Private Limited, ABC Private Limited has outsourced its receivables department to, let's say, another service organization. Then that service organization is going to handle those receivables. It's going to keep a tab of all the receivables of the company. It's going to follow up with the people who are going to pay. It's going to accept the payments from the people. And then, of course, give that payment back to the company, because it's company's, ABC Private Limited's money. That service organization is collecting from the customers, because receivables department has been outsourced to that service organization. Right? So in this case, what happens? If you are the auditor of, let's say, that ABC Private Limited, if you are the auditor of ABC Private Limited, now, if the receivables department had been outsourced, you are the auditor of ABC Private Limited, you are the external auditor of ABC Private Limited, and the receivables department has been outsourced to that service organization. That means whatever that service organization does, that is going to affect our financial statements, right? Whatever that service organization is going to do, that is going to affect the financial statements of ABC Private Limited. Correct? So that is why I am concerned as an external auditor of ABC Private Limited. I am concerned how the job is being done by that service organization. I am concerned of how the job is being done by that service organization. Right? How are they performing the work? What is their reputation? What is the nature of the work that they're performing? What is the amount of the transactions that they're taking care of? All of that I will be worried about. Right? And the most important thing that the external auditor will be worried about is the internal controls at that service organization. What kind of internal controls are present at that service organization? What kind of internal controls are present? Are the internal controls which are present at that service organization, are they sufficient? Are they operating effectively? Right? Because if the internal controls at that service organization are not proper, if the internal controls are failing, then the receivables of this particular company can be misstated. The amount of receivables of this company can be misstated then. Right? Okay. Clear? Did you understand about what is a service organization and why is the auditor bothered about that service organization? So ABC Private Limited is a company. It has outsourced one particular thing. It has, let's say it has outsourced receivables department to a service organization. And that service organization is now taking care of the receivables. That means if they are doing their job wrong or if they are doing something wrong, then that is going to affect ABC Private Limited's financial statements, right? Because those receivables are whose receivables? It is ABC Private Limited's receivables. It is just that it is being managed by that service organization. So that is why, as an external auditor of ABC Private Limited, you will be concerned about how that service organization is doing its job, about how that service organization is, taking care of the receivables, how is it receiving the payments, how is it, do they have proper internal controls in place? Because internal controls are going to avoid frauds and errors at the service organization. So the auditor is worried about that. Now, how will the external auditor, if you are the external auditor of ABC Private Limited, how will you get to know about the internal controls of the service organization? If you are the auditor of ABC Private Limited, how will you get to know about the internal controls of the service organization? What will you do? You will contact the auditor of that service organization. That service organization will also have an auditor, right? Like you are the auditor of ABC Private Limited, that service organization will also have some auditor. So you will contact that auditor in order to get information about the internal controls at the company. Internal controls at the service organization, you will get in touch with the external auditor of that service organization. You will try to obtain a type 1 or type 2 report from them, from that external, from that service organization's auditor. You will try to get a type 1 or a type 2 report. What is a type 1, type 2 report? That we'll see. That we will see. Don't worry about it right now. But read what is given now. Service organizations. ISA 402, audit considerations relating to an entity using a service organization. See, what should you do if you are the auditor of an entity which is using service organization? Obtain an understanding of that service organization to assess the risk of material misstatement. And what do you do in obtaining that understanding? You understand the nature of services provided, what kind of services are being provided by that service organization, what kind of relationship is with the client, and what is the materiality of the transactions. If the transactions are not material, then it should not bother you, right? The transactions which are being handled by that service organization, if those transactions itself are not, if those are not material, then you as an auditor would not be bothered about those particular things. Correct? Okay. Next, inquiries. This can be obtained through what? How can you obtain all of this information? This can be obtained through inquiries with client. Next, confirmation from service organization and their auditors. You can inquire with the client. You can inquire with ABC Private Limited. You can take confirmations from that service organization and their auditors. You can get external confirmations from them. You can visit that organization. You can go and visit that service organization, or you can get a type 1 or a type 2 report from the service organization auditors. From the auditors of service organization, you can get a type 1 or a type 2 report. Okay. Now, what is a type 1 or a type 2 report? What is a type 1 or a type 2 report? Let's see. See, a type 1 report. A type 1 report is about what? A type 1 report will provide you only the description and the design of the internal controls at service organization. A type 1 report is going to give you what? A type 1 report is going to give you only the description and the design of the internal controls at the service organization. A type 1 report is not going to talk about how is it working. Are the internal controls operating effectively? It will give the description. It will describe how is the control. It will describe, the design of the control. It will describe the internal control, but it is not going to discuss the operating effectiveness of that control. It is not going to discuss as to whether it is operating effectively or not. Is it working effectively or not? A type 1 report. Whereas a type 2 report will contain description, design, and also operating effectiveness of the internal controls. That service, and who will give you these reports? The auditor of service organization. The auditor of that service organization, he is going to give you this report, right? He's going to give you a type 1 or a type 2 report. Type 1 report is only going to concentrate on description and the design of the internal controls, but type 2 report will concentrate on description, design, and also operating effectiveness of the controls at service organization. Right? Okay, read. Obtain a type 1 or a type 2 report from service organization's auditor. A type 1 report provides a description of the design of the controls at service organization prepared by the management of the service organization, right? Those internal controls are, of course, prepared by the management. It includes a report by the service auditor providing an opinion on description of the system and suitability of the controls. It is containing the description of the controls and the suitability. Next, a type 2 report is a report on description, design, and operating effectiveness of the controls at service organization. Type 1 report is not talking about operating effectiveness. Next, it contains a report prepared by the management of the service organization. It includes a report by service auditor providing an opinion on description of the system, the suitability of the controls, the effectiveness of the controls, and the description of test of controls performed. Right? Okay. If the auditor intends to use a report from service auditor, they should consider two things: competence and independence of the service organization auditor, and the standards under which the report was issued. See whether that service organization auditor is competent enough. Is he independent? And see which auditing standards were followed while issuing that report. So see these two things while you use the type 1 or type 2 report from the service organization auditor. All right. Come back. See. Next bullet. If the controls are expected to operate effectively, if you are thinking that internal controls of that service organization are going to operate effectively, then what should you do? You should obtain a type 2 report. You should either obtain a type 2 report, or you should perform test of controls at the service organization. Type 2 report means what? That auditor of service organization is going to perform test of controls. In type 2 report, if you're receiving type 2 report, the auditor of that service organization is performing test of controls, and then he's issuing a report. Whereas you yourself can go and perform test of controls. That's the second option. Perform test of controls at service organization, or use another auditor to perform tests of control. Either you yourself go and do test of control, or use another auditor to perform test of controls. Great. See reporting. Modify your auditor's opinion if sufficient appropriate evidence has not been obtained. If you're not able to obtain sufficient and appropriate evidence about that service organization, you can modify your audit opinion. You can give a modified opinion. What is a modified opinion? That we'll see in reporting chapter, the last chapter. Next, the use of service organization is not mentioned in the report. The use of the auditor of that service organization will not be mentioned in your audit report, because it's not like you are delegating the responsibility to that person. No, the responsibility is still yours. The responsibility of seeing whether the financial statements of ABC Private Limited contain material misstatements or not, that responsibility cannot be delegated. It is still your responsibility. So you cannot write the name of that auditor of that service organization. No, you can't write his name in your audit report. If you're writing his name, that means what? That means you're delegating him that responsibility. Can you do that? No, you're only taking help from that. You're only taking help from that auditor of service organization. You're not delegating or switching responsibilities. Okay. So this is about service organization. Then the last point, what are some computer assisted audit techniques? What are some computer assisted audit procedures where you're using basically information technology or computers? In short, it is also called CAAT. It's called CAT, CAAT, computer assisted audit techniques. In computer assisted audit techniques, there are mainly two techniques: test data and audit software. There are mainly two techniques. One is test data and the other is audit software. Now, what is test data and what is audit software? Listen very carefully. What is test data? Test data is nothing but some dummy data you're going to put in the client's system. The client will have some accounting system, right? Some dummy data you will put in the client's accounting system to see how that client's accounting system is processing your dummy data. For example, let's say you want to put a rent transaction of 60,000 rupees, a rent transaction, let's say an accrued rent transaction of 60,000 rupees. So when you're, this is a dummy data. So you want to see how is this being processed by the accounting system of the client? How is this entry going to form a journal entry? How is it going to be posted in ledger? How are those ledgers getting to be balanced and then going to trial balance? How is it being reflected in P&L and balance sheet? You want to look at the entire procedure. So what are you doing? You're putting this dummy data, you're putting this fake data into the client's accounting system and seeing how that accounting system will process this data. And you're seeing how that accounting system will process that data. And while doing so, you will observe if there are enough internal controls present in that system. In that client's accounting system, you will see if there are enough internal controls are present or not. While checking this, while putting dummy data and checking how is it processing, you will also see whether proper internal controls are present or not. If you're entering some invalid data, it should be rejected. If you're entering some invalid data, it should be rejected by the system. The system should not accept such invalid data. Correct? Okay. So read test data. What is test data? Test data is data generated by the auditor. It is the data generated by the auditor, which is then processed using the client's computer system. Right? Whose computer system are you putting that dummy data in? The client's computer system. Your client computer system, you're seeing how that client's computer system is processing that dummy data. Okay. Read the next point. Put dummy data through the system and make sure the internal controls within operate as they should. You're also looking whether the internal controls are operating or not within that system. Next, valid data should be accepted and invalid data should be rejected. The valid data, the data which is valid, that should be accepted, and invalid data should be rejected. That's about test data, where you're putting some dummy data. Remember the words, test data. What is it called? It's called test data. Next, audit software. Audit software. What is an audit software? A software which the auditor is using in his audit firm for auditing. A software that is specifically designed for the auditors. It is being used for doing the audit. It is being used for doing the audit. For example, audit softwares can be used for selecting a sample. We've seen sampling in this chapter, right? That an auditor selects a sample of transactions. So which transactions should be selected? That can be decided by this audit software. That can be decided by this audit software. So software which is specifically designed for the purpose of audit to help the auditors. See, what is it used for? It is used for selecting samples. You can select samples, checking computations and calculations by reperformance. That audit software can reperform or recalculate things, compare two or more different files, perform detailed analytical review. So you're able to do sampling, you're able to do recalculation, you're able to do reperformance, you're able to do analytical procedures, you're able to compare things with the help of this audit software. You can take the help of this audit software in doing all of these things like sampling, recalculation, reperformance, analytical procedures, or comparing. Okay. This is where we end this chapter. Any doubts in service organization or computer assisted audit techniques? Do you have any doubts? If you don't have any doubts, please mention that also, that you don't have any doubts. No doubts. Any doubts that you have? No doubts? I'm waiting for your answers. Okay. If you have no doubts, let me take you to a question and let's see if you're able to answer that for me. 1 second. Let me open the exam kit. Yes. Look at the question on your screens. This one. For question numbers 121 to 125, these are going to be your objective test questions. These are objective type questions. So let's see. Let's read. Read. It is 1st July 2015. You are an audit senior in Thor & Co. and you have been assigned to the audit of Hemsworth Co. for the year ended 31st May 2015. Okay. You are due to commence the audit of trade payables and the following procedures are listed in the audit plan. So you are due to commence the audit of trade payables and the following procedures are listed. Let's see what is listed about the trade payables. Procedure is listed and the selection method is listed. See the procedure first. First procedure. For 20 invoices listed in the payables ledger, trace the amount recorded to the purchase invoice. What are they doing? They are selecting 20 invoices which are there in payables ledger and that they are tracing it to the purchase invoice. Listen very carefully. What are they doing? They're selecting 20 invoices from the payables ledger. From the books of accounts, they're selecting some 20 transactions. And that particular transaction, that particular invoices which are listed in payables ledger in the books of accounts, that they are matching, that they are tracing it to, or they are matching it to the amount which has been recorded in the purchase invoice. So what are they doing here? Are they checking for completion or are they checking for occurrence or existence? Are they checking for completion or are they checking for occurrence or existence? Bhumika says existence. Basically, are you checking for completeness or existence? What are you doing here? Here, you're selecting the invoices and trace in the books of accounts and tracing it back to the purchase invoices. That means you're seeing in the books of accounts and then seeing whether that transactions which you have recorded in the books of accounts, does it have the relevant invoice or not? So what are you doing here? You're checking for existence or occurrence. You're not checking for completeness. If you go reverse way, then you check for completeness. Correct? Here you're checking for existence or occurrence. You're selecting some invoices, you're selecting some transactions from the books of accounts and then matching it with the invoices to see whether there are invoices or not for them. Correct? So here you're checking for existence or occurrence and not completeness. See the selection method. Start at a random point and test every $100th. First, tell me, is this a sampling method or a non-sampling method? What was sampling method? I told you, for a selection method to be sampling method, every unit, every transaction should have a chance of selection. So does every unit or every transaction, does it have a chance of selection? Is it a sampling method or a non-sampling method is what we are deciding. They are giving selection method. Is that selection method sampling or non-sampling is what we are deciding. For sampling, every item should have a chance of selection, right? Yesterday we discussed. So is this method start at a random point and test every $100? Is it a sampling method? Of course, yes, it's a sampling method. Why? Because you're starting at a random point. So every item has a chance of selection because your start is a random point. And then you're testing every $100. What is this? Which sampling method is this? Can you tell me which sampling method is this? I will tell you it's a statistical sampling method. Under statistical sampling method, there were three. You tell me which out of these three is this. There was random sampling method, there was systematic sampling, there was monetary unit sampling. So is this random sampling method, systematic sampling method, or monetary unit sampling? Shashanka says systematic. Okay. What about others? Is it random sampling method? Is it systematic sampling method? Or is it monetary unit sampling? I discussed or I revised that for you when I started today's class also. I explained this yesterday and I explained it to you while I started the class also. Is it only Shashanka who wants to try? Do I go back to the point where we saw these three methods? One second, let me show you that. So that you are, where did that go? 1 second. Yes. Yes, see this? Random selection, systematic selection, and monetary unit sampling, monetary unit selection. Random selection was using random number generators or random tables. Systematic selection was selecting first transaction randomly and then selecting every nth transaction. What was monetary unit selection? Monetary unit selection was selecting every nth dollar. So what is given to you? What is given to you in the question? In the question, let me go back to the question for you. Oh, sorry. 1 second. Yes, I came back to the question. See, in the question, what is given? Start at random point and test every $100th. Bhumika also says systematic. It is not systematic, right? It is monetary unit. Did they say test every 100th transaction? Did they say test every 100th transaction? If they said test every 100th transaction, then it will be systematic selection. But here they are saying test every $100. This is monetary unit selection, right? If you're selecting every $100, that means you're going to select high value items. I told you to go please see an example which is given in your study text for monetary unit sampling. And I told you every 100th transaction, if you're selecting, that is systematic selection. But every $100 if you're selecting, that is monetary unit sampling. Clear? Everybody? Of why this is monetary unit sampling? Shashanka, Bhumika, and others who have not answered at all. Clear, guys? Okay. Thanks, Bhumika. See the next procedure. From the cash book, select 10 payments made to suppliers in the first week of June 2015. So from the cash book, you're selecting some 10 payments made to the supplier in the first week of June 2015. That means after the year end. The year is ending on 31st May 2015, right? After the year end, in the next month, that means in the first week of June 2015, you're selecting some 10 payments and tracing it back to the related goods received note. You're tracing it back to the good received note. If the goods were received before 31st May 2015, trace through to the payables ledger or accruals list. If those goods for which the payment is being made after the year end, if the goods were received before the year end, it should be included in payables, right? Because when the goods are received, that's when a payable entry is passed. That's when a purchases entry is passed, when you receive the goods. So if you had received the goods before the year end, but the payment was done after the year end, the receipt of the goods, at the time of receipt of the goods, you must have recorded a payables. That's what you're checking here. Basically, you're checking for cutoff. Basically, you're checking for cutoff. See the selection method. Highest value payments during the period specified. What is this method? Which method is this? Highest value payments during the period specified. Which method is this? Can anybody tell me that? First, you need to decide, is it a sampling method or a non-sampling method? Can it be called a sampling? Can it be called as a sampling method, or is it a non-sampling method? They're saying highest value payments during the period specified. Does every item get a chance of selection? When can you call a method as a sampling method? When every item has a chance of selection. Right now, they are saying highest value payments will be selected. So every item does not have a chance of selection. Every item does not have a chance of selection. So this is not a sampling method. It is not a sampling method only. And next, third procedure. For 10 suppliers included in the payables ledger, reperform supplier statement reconciliation. You're doing reperformance of supplier statement reconciliation. See the selection method. Any supplier that have sent supplier statement at the year end. Any suppliers out of the suppliers who had sent the statement of suppliers or supplier statements. This again is a non-sampling method, because the suppliers who have not sent their statements, they will not be selected. So every supplier is not having the chance of selection. So this is also what? This is also a non-sampling method. Okay. Come to the questions now. Yes. See the first question and you tell me which three of the following should be considered when deciding whether to use sampling. Which three things should you decide? Out of A, B, C, D, and E, what are the three things that you should decide when? What are the three things you should consider when deciding whether to use sampling method or to test 100% of transactions? What do? See all the 5 options and tell me which 3 options. You can try. It's okay if you're wrong. It's okay if you're wrong. It's good. It's good if you're wrong, because that's when you will remember that you were wrong here. Correct? That's when it will be easier for you to recall things. So take a guess. I need 3. Nitin, I need 3 options. You're giving me only 1. Bhumika says 2, 3, 4. That means B, C, D. What about others? Shashanka says 1, 3, and 4. Okay. A, C, and D. So 3 and 4 are matching in both Bhumika's answers and Shashanka's answer. I want others also to try. Khadija says 3, 4, and 5. Okay. Let's see what are the correct options. So they are asking which 3 things should be considered when deciding whether to use sampling or not. The first one says the time the auditor has available to perform the procedures. Now, the time that the auditor has can never determine the kind of procedures that he does. The time that he has, it should not be the case that only because he has no time, only because he has less time, he's doing lesser procedures. He should not be compromising on his procedures. That is why he's planning the audit. That is why he's considering the issues even before accepting the engagement. At that time, he will see, does he have sufficient time to do this audit? At the time of, we had seen in planning chapter, right? Issues to be considered before accepting an engagement. Even before accepting an engagement, you will see how much time do you have, how much resources do you have, are you competent enough for this audit? So the time is already being seen there, that do you have sufficient time to do this audit? So the time should never be deciding factor as to what kind of sample you should select. Whereas the second, third, and fourth option, the appropriateness of the population, the size of the population, and completeness of the population will of course decide if you want to use sampling or not. Correct? Because if the population itself is not appropriate for sampling, can you do sampling? For example, yesterday we saw one point that if the population is, let's say, non-homogeneous, if the population is non-homogeneous, what do you mean by non-homogeneous? That means every transaction in the population is different from another. Every transaction in the population is different from the other transaction. That all transactions in the population are non-homogeneous. Then can you do sampling? Even if you select a few transactions, will it represent the entire population? No, it will not represent the entire population, because every transaction is different from another transaction. Because every transaction is different from another transaction because the population is non-homogeneous. So that is appropriateness of the population. That is the population appropriate to do sampling? Because if the population is non-homogeneous, it is not appropriate for sampling. Only when the population is homogeneous, that's when you can do sampling. So appropriateness of population. Size of population is, of course, because if the size is too small, Don't do sampling. Completeness of population is also, again, of course, if the you need complete population in order to do sampling. So of course the answer is 2, 3, and 4. So I think Bhumika has given us the correct answer. And last one, the ease with which the information is expected to be available should not determine. You should not see how easy it is to get things. Only because it is easy to get things, don't do sampling. Only because of that reason. That should not be the reason. That should not be the sole reason. Right? As to how easy or how difficult it is to get various evidences. If it is easy or difficult, that should not determine the way of your procedures. Okay. Next, identify whether the selection method described represent sampling. First method, was it sampling or not sampling? You tell me. S or NS? The first method, was it S or NS? I'm going back. Yes, this one. First one was S. First one was sampling, right? What about second and third? First one was sampling. Second, highest value payments during the period specified. Non-sampling. Third one, any suppliers that have sent supplier statements. Again, non-sampling. Why non-sampling? Because every item does not have a chance of selection. If every item has a chance of selection, then only it will be sampling. Then only it will be sampling. Next, 123rd. In respect of procedure 1, in respect of the first procedure, if the method stated to test every 100th item, which method would be described? A, B, C, or D? You tell me. Read the question again if you want and tell me, is it A, B, C, or D? Khadija says systematic. Bhumika also says systematic. Of course, systematic, right? They're asking that if in the first procedure, they tested every 100th item, instead of testing every $100, if they tested every 100th item, then it's going to be systematic sampling, systematic selection. The correct option is option C. Great. For this next question, you need the understanding of procedures chapter. So we will leave this question right now. Okay. So this particular question is done. I hope you enjoyed watching that question, and I hope it gave you more insights into the questions as to how questions can be asked in the exam. Now, let us go to our next chapter. Let me share the specific material that we are going to refer for that. 1 second. Yes. The next chapter that we are going to move to is chapter number 8, systems and controls. What do you mean by systems and controls? Basically, the internal controls. We're going to study about what? We're going to study about internal controls. Now, about some internal controls, I've already explained it to you previously, and I gave you two internal control activities or two examples of internal controls. Do you remember what were the two? Can you tell me what were the two internal control activities that we already discussed? The internal control activities. Where did we see this? When we were studying control risk. When we were studying control risk, under audit risk, there was inherent risk, control risk, and detection risk, right? Under audit risk, there was inherent risk, control risk, and detection risk. Under control risk, there was what? We said the risk that the internal controls of the company are failing to detect or correct the material misstatements due to fraud or error. So internal controls, what do you mean by internal controls? Or can you give me the examples that I told you about internal control activities? I gave you two internal control activities. Anybody? No one remembers? I'll give you a clue. Segregation of duties or authorization. Do you remember? Did I not give you these two internal control examples? Segregation of duties and authorization. No? If you don't remember, tell me no, so that I can explain those examples again. Because those examples are important for you in order to understand that what are internal controls, in order to understand internal controls. Apeksha remembers. What about others? Okay. Let me explain that to you again. It's a weird class. It's a weird class because there are 49 participants, but the kind of response that I get is so thanda. It's so cold. I hope you know what I mean by thanda. That you guys either take so much time to respond, and then after taking so much time also, there are probably like 2 people who respond, or probably maximum 3 people who respond. And I'm wondering, is it that all the participants have just switched on the video, switched on the class, and they're not even listening to me? I should randomly start taking attendance, right? I should probably start doing that, where I'm randomly starting to take attendance to see who's present in the class. I'm sure about half of the class or more than half of the class is not going to give me that attendance because they're not even listening to the class. Right? Okay. Let us come back. So I was telling you about internal control activities. Now, the two internal control activities, or the two examples of internal controls that I already gave you, is segregation of duties and authorization. What did I tell you about segregation of duties? If you remember, we had taken an example of a clothing store like, let's say, Max Showroom. We had taken an example of the clothing store like, let's say, a Max Showroom. So in that Max Showroom, there will be person at the billing desk, right? There will be one specific employee who will be at the billing desk. Now that person who's at the billing desk, that person is doing what? That person is accepting the clothes that the customer has selected, and he's giving the invoice to that customer and collecting cash from that customer. Correct? He's giving the invoice to that customer and collecting cash from the customer. Now, when he's collecting cash from the customer, let's say he's only responsible for collection of the cash. He's only responsible for safe custody of the cash, to keep it safely, for the safe custody of the cash. And he's only responsible for, let's say, recording of that cash in the books of accounts. He's only responsible for recording of the cash in the books of accounts. So what can happen? What will he do? You tell me. If I'm allowing that same person to do all of these three things, what can that person do? If I'm allowing that same person to do all these three things, what can that person do? He might steal the cash. He might do what? He might steal that cash away. He might take the cash from the customer and put that cash in his own pockets. He might steal the cash, right? He will take the cash from the customer and put that in his own pocket. And he will not record that in the books of accounts. He will not record any entry of cash receipt in the books of accounts. He's only responsible for entering these entries in books of accounts, right? So he will not account for any entry in the books of accounts. In books, he will not do any entry. So that's how he can steal the cash. But to avoid this fraud, in order to make sure that this fraud does not happen, what can the company do? The company can implement segregation of duties. What can the company do? They can segregate the duties between, let's say, 3 people. One person will be responsible for collecting the cash, and another person will be responsible for safe custody of that cash, and another person will be responsible for recording of that cash in the books of accounts. So if you have segregated the duties in this manner, then doing a fraud is more difficult. Now, in order to do a fraud, all three of them must come together. Otherwise, the fraud won't happen. Now, in order to do a fraud, all three of them must come together, right? Then only the fraud can happen. Then only the fraud can happen. Otherwise, the fraud cannot happen. So now, when you've segregated the duties, even if one person is trying to do some manipulation, the other persons will come to know. It will get detected also. So it will prevent frauds also. It will detect frauds also. So that's why it's an internal control, segregation of duties. Similarly, and another internal control that we saw was authorization. Authorization. What was authorization? We took an example that, let's say, the lower level employees are, let's say, preparing sales invoices. The sales invoices are, let's say, being prepared by the lower level employees. Now, these sales invoices which the employees have prepared, let's say there is a policy that every invoice has to be authorized by a senior person, by a manager. Then what will happen? That manager will receive the sales invoices which have been prepared by the juniors. That manager is going to receive the sales invoices which have been prepared by the junior. He's going to check that invoice as to whether everything is correct or not, whether the amounts are correct, whether the unit price is correct, whether the number of units are correct, whether the calculations are correct, whether the total is correct, whether the taxes are correct. Right? So he's going to check all of these things, and then he's going to sign or authorize that thing. After that, he's going to sign or authorize it. Correct? So then, if that particular sales invoice has some errors, or if that particular sales invoice has some fraud, that will get detected. That will get automatically detected by that manager who's checking that invoice. That's authorization. So this is also doing what? It's preventing frauds or errors. It is preventing frauds or errors, or it is, if frauds or errors happen, it is detecting those frauds and errors. So again, it is an internal control. All right. Clear now? Now at least, do you remember that we discussed both of these points? I hope now you recall. Khadija says yes. Okay. Now, what are internal controls? How can you properly define them? What are internal controls, or how can you properly define them? Listen, internal controls can be called as processes and procedures. Internal controls can be called as what? They can be called as the processes and the procedures which are designed by the directors. Correct? The directors are responsible for internal controls, right? Who are responsible in the organization for implementation and designing of internal controls? The directors. The directors have that responsibility of designing and making sure that the internal controls are implemented effectively. So the directors are designing that process, are implementing that process to enable what? Read, there are three things. So read, internal control is the process designed and effected by the directors. It is a process designed and effected by the directors and others, by directors and others, to enable what? To enable the achievement of entity's objectives, to enable that entity achieve its objectives with regard to reliability of financial reporting. Because of internal controls, the financial reporting will become more reliable, right? The P&L and balance sheet, they will become more reliable, because frauds and errors are getting reduced or it is getting detected. That means frauds and errors or misstatements in the balance sheet, misstatements in P&L are getting avoided. So of course, financial reporting will be more reliable. So internal controls are helping the entity in achieving the objective with respect to reliability of financial reporting, effectiveness and efficiency of operations. I hope you remember these two words as to what is effective and what is efficient. I told you already. Effective is what? When can I call something effective? When it is achieving the objectives or the goals. When that particular work is achieving the objective of that doing that work, then that work is called effective. When is it called efficient? When maximum output is being achieved with minimum input. When maximum output is being achieved with minimum input, that's when it's called efficient. So internal control is making sure also of what? Also of effectiveness and efficiency of operations and compliance with applicable laws and regulations. Complying with applicable laws and regulations, right? And what is the objective of the internal controls? You remember the objective of internal control is to prevent, detect and correct the material misstatements which can happen due to fraud or error. This is with respect to your financial reporting, your financial statements. With respect to your financial statements, what is the internal controls doing? It is trying to prevent altogether, or detect if some fraud or error has happened, detect and correct. So prevent, detect and correct the material misstatements which can happen due to fraud or error. That's the objective of the internal control. Okay. How is the auditor getting affected by internal controls? Why is the auditor bothered about it? Why is the auditor bothered about these internal controls? Why is he getting affected? The external auditor is bothered about the internal controls of the company because that is going to determine his risk, right? Like if the internal controls of the company are weak, that means if the internal controls are, let's say, not operating effectively, then the control risk increases. The control risk increases means what? The risk of material misstatement increases. If the internal controls are weak at the company, the risk that material misstatements will happen in the financial statement, that increases. The control risk increases. Control risk is a part of RMM, right? Risk of material misstatement had inherent risk and control risk, if you remember. Your risk of material misstatement had inherent risk and control risk. So if the internal controls are weak, the control risk is going to increase. And because of that, the risk of material misstatement going to increase. The risk that the financial statements are going to be materially misstated. So if the risk, if there's an increase in the risk of, material misstatement, then what will happen? The auditor will try to reduce the detection risk by doing more substantive testing. If there's an increased risk of material misstatement, the auditor will do more substantive testing, right? Because the risk of material misstatement is high. So he will do more substantive testing. He will increase the sample sizes. He will employ more skilled and experienced people in the audit team. He will increase the direction and supervision and review. He will increase the levels of review or levels of supervision. All of that we've seen already in the audit risk chapter. That's why internal controls are important for him. So read, more reliable system of control. Reliable system of control means what? That means internal controls are reliable, means lower risk of material misstatement. Reliable system contains stronger controls. If the internal controls are strong, then only we can say that the internal controls are reliable. Next, the auditor must understand the system. The auditor should first understand the system. He should understand the controls within that system, and he should test whether the controls work. The external auditor should do what? He should understand the system first as to what is the system, then understand the internal controls within that system, and then test those internal controls, test of controls. All of these three things the auditor should do: understand the system, the entire system, understand the internal controls within that system, and test whether those internal controls are working. Next, the more effective and reliable the system, the lower the audit risk. Correct? If there's a more reliable system, the audit risk is going to be lower. The lower the audit risk and greater the reliance the auditor can place upon the system, the auditor can rely more on that system. So this we already know. We've studied that already in the audit risk chapter. Okay. Now, let us discuss what are the different components of internal controls. What are the different components of internal control? Now, there are 5 components of internal controls. How many? 5. There are how many? 5 components. There are 5 components of internal controls, which include, if you want to remember all of these 5, remember the acronym CRIME, C-R-I-M-E. If you want to remember all of these 5 components of internal control system in an entity, when internal controls are present, what are the different components of internal control system? There are 5 components, and in order to remember these 5, remember the acronym CRIME, C-R-I-M-E, where what is C? C is control activities. C is control activities. R is risk assessment process. I is information system and communication. M is monitoring of controls. E is for environment, control environment. The last E is for environment and control environment. The last E is the word environment in control environment. So CRIME, C-R-I-M-E, CRIME, right? Let us see the first one, control environment. Let us discuss the first one, the first component, control environment, which is E of the CRIME, control environment. What do you mean by control environment? Now, one of the most important components of an internal control system in an organization is the environment of that organization. What kind of control environment is there in that organization? Because finally, where are the things flowing from? It is flowing from the top, right? It is flowing from what is the attitude of the top level management. If the top level management is only not serious, if the attitude of the top level management is so that they are only not serious, do you think the employees below them will be serious? No, right? So the attitude and the philosophy of the management, of the top level management, matters as to what do they think about internal controls. What does that top level management, what does that top level people think about internal controls? Because if they are only thinking that internal controls are, if they are only thinking that internal controls are not that important, or they only, let's say, don't have integrity, they're dishonest. If the top level management is only dishonest, do you think then the lower level employees will be honest? Of course not. So one of the important components of internal control is the control environment, as to how is the environment of the company, and that is mainly decided by whom? That is mainly decided by how is the attitude, what is the thinking of the top level management, right? If the top level management is only dishonest, then of course the lower level employees will also be not scared to be dishonest. They will also not have integrity. Integrity means what? Integrity means straightforward and honest, right? So you have to see what kind of ethical values, what kind of integrity does the top level management has. So read control environment. This includes the attitude and the philosophy of management with regard to control. Example, a commitment to integrity and ethical values, a formal organization structure, and proper training of staff. They should have commitment to integrity and ethical values. They should be committed to that. There should be a formal organizational structure. The structure of the organization should be a proper one and should be formal. And there should be proper training of staff. the new joinees, the new staff who are joining the organization, they should be correctly trained. They should be appropriately trained. They should be properly trained. That is about control environment. The next component of internal control system is the risk assessment process by the management or the entity's risk assessment process, not the audit risk. We are talking about the business risk. Here, we are talking about business risk, which can affect the financial statements. Audit risk we've seen already in different chapter, right? Here we are discussing about internal controls. So that's why we are bothered about what is the risk assessment process of the management. How are they assessing the risks? Because those business risks can sometimes hamper or affect the financial statements of the companies. Those business risks that the business is facing, those business risks can be of so nature that it will affect the financial statements of the companies. So see, what is the entity doing? What is the management doing in order to assess the risk? What is their process of risk assessment? What is their process of risk assessment? How are they assessing the business risk involved? How are they assessing the business risk involved in their business? So check that. That is entities risk assessment process. Read a more robust risk assessment process. That means more strong. A more strong risk assessment process will reduce the risk of misstatements. It will reduce the risk of misstatements happening. Okay. Next, information system and communication. The next internal control component is about information system and communication. What do you mean by information system? Your IT systems. Your IT system, your processes and the systems which you're using for financial reporting. The kind of softwares that you're using, the kind of softwares the company is using, the kind of IT the company is using to record the entries, to record the journal entries, to process the entries in ledger, to report them in the financial statements. What is the process of the entity? What is the system of the entity? And mostly it's going to use information technology, right? So what is that system like? So read, the auditor should obtain an understanding of the information system, including the related business processes relevant to financial reporting. What is the information system relevant to financial reporting? What is the system that they are following in order to process a transaction, in order to record for a transaction and process it in the books of accounts? What is their system? What is the software that they're using? So that is one of the component. See the fifth one now. We'll first see fifth one, then we'll go to fourth one. Fifth one, monitoring of controls. Only implementation of controls is not job done. It is not the case that the management has implemented the controls and then they can, say that, okay, our job is done. No. After implementing the controls, after designing and implementing them, the management also has to monitor them regularly. The management also has to monitor the internal controls regularly to see whether they are operating effectively or not. The management has to monitor the internal controls. They have to oversee the internal controls, oversee or monitor the internal controls to see whether they are operating effectively or not. In order to do this, the management can outsource this work or the management can delegate this work to internal auditors. Right? Internal auditors are doing this only, right? If the management themselves does not want to do this job, if the management themselves do not want to monitor the internal controls, what can they do? They can employ internal auditors. They can get internal auditors and they can tell internal auditors to monitor internal controls. Correct? Internal auditors are who? Internal auditors are only the ones who are testing the internal controls for their operating effectiveness, right? That is nothing but monitoring of internal controls, seeing how the internal controls are working and seeing whether there are any need for improvement of internal controls. Is there any scope of improvement? Can we improve those internal controls in any manner? That is monitoring. So internal auditors can do that job, right? Okay. What we'll do is we'll take a small break, and after the break, we'll start continuing to discuss. We'll continue from where we left. We'll start discussing control activities, right? So you also take a break, and I will switch on the timer. Come back after the break, and we will continue to discuss from where we left. Yes. So we are back from the break. And before the break, we had discussed the 4 components of internal controls. We had discussed about we discussed about R, risk assessment process. We discussed about I, information system and communication. We discussed about M, monitoring of internal controls. We discussed about E, control environment. Now, the only thing left is C, control activities. What are the different internal control activities that a management or that a company can employ? The 2 internal control activities, we've already discussed them. What are the 2 internal control activities? Authorization and segregation of duties. Authorization and segregation of duties, these 2 you already know, correct? Segregation of duties we've discussed in detail as to how is segregation of duties and internal control, and how is authorization and internal control. Apart from authorization and internal control, there are other internal control activities like physical and logical controls. If you want, you can write down these things in your books of accounts. In your notes. First one is authorization. Second one is segregation of duties. So authorization, segregation of duties. Third one is physical and logical controls. What is physical and logical controls? You must have seen in a lot of companies that at the entrance, they have this scanner, right? A lot of companies at the entrance, at their doors, at the entrance gate, they will have this scanner, and the employee with ID cards, only they can scan their ID cards, and then the door will open and they can enter the office, right? At the entrance, at the door, there will be a scanner. The ID card has to be shown at that particular scanner. That ID card might have a microchip, correct? That ID card might have a microchip, and that microchip is getting scanned by that particular scanner. And then the door opens for only the people who have that ID card. Only the people who have that ID card can access the office then. That means, what are you trying to do with that? That's a physical control. You're trying to make sure that unauthorized access is not made in the company to avoid or to prevent frauds and errors. To prevent any fraud, to prevent any theft, what are you doing? You are employing a physical control. At the door of the office, you're having one scanner, and only the employees with the ID cards with that microchip can scan at that particular door, at that particular scanner, and only they can enter the office. So you're having what? You're having a control to prevent unauthorized access. That is a physical control. That is nothing but a physical control. Or some offices have fingerprints, right? There will be a scanner. You have to put your finger, you have to put one of the finger, let's say thumb. You have to put your thumb impression on that scanner. And if that matches, then only the door would open for you. That's what? That's a physical control. Apart from physical control, there are logical controls also. Physical and logical controls. What are logical controls? Logical controls, for example, passwords in your laptop. Your laptop having a password is what? That's a logical control. With that password, you're preventing any unauthorized access to the data in that laptop, in that computer. In that laptop or computer, a lot of data would be there, right? For the business, which is very crucial for the business. That data, you're protecting it By having a password on that laptop or computer. So that password is what? It's a logical control. So physical and logical controls are also control activities. So authorization, segregation of duties, physical and logical control. Next is reconciliations. Next is what? Reconciliations. The reconciliations that the company does at the year end, those reconciliations are also pointing towards any errors that have been done in during the year, right? For example, your bank reconciliation statement, your BRS. Your bank reconciliation statement is an example of reconciliation, right? The BRS activity that the company does. What's a bank reconciliation statement? You're reconciling the balance which you are showing in the books of accounts with the balance that is there in the bank account statement. In the bank statement, the balance which is at the year end, you're matching, you're trying to reconcile that balance with the balance in the books of accounts in your books. After BRS also, if anything is not matching, if that particular thing is not reconciling, then probably there are errors in the books of accounts. Correct? There are errors in the books of accounts. If after reconciliation, after BRS also, if the balances are not matching, then there will be what? There are errors, that means in the books of accounts. You must have done some error during the year, and that is why the balances are not reconciling. So reconciliation is one of the control activities. Similarly, the last control activity is verification. Reconciliation and verification. Verifications. Like there's one verification that the management does is inventory counts. They count the inventory which is physically present and match that to the books of accounts to see whether that is matching. So that's also an internal control activity. Verifications. Verifications of tangible assets, like verification of cash, inventory, your fixed assets. That is also a control activity. So how many control activities did I give you? 5. Remember these 5 and write down in your notes. Authorization, segregation of duties, authorization, segregation of duties, physical and logical control. Third one, physical and logical control. Fourth one, verification. Fifth one, reconciliation. Reconciliation and verification. So authorization, segregation of duty, physical and logical controls, verification and reconciliations. Verification and reconciliations. All of these are internal control activities. Okay. So with this, we finish what? We finish the 5 components of the internal control. What are the 5 components of internal control? Remember them by the acronym CRIME. C-R-I-M-E. Great. Let's move forward. Next, see the information technology controls, the IT controls. The information technology controls or the IT controls. The information technology controls or the IT controls can be broken down into 2 parts. General controls and information processing controls. The IT controls or information technology controls, that can be broken down into 2 parts. One is general controls, the other is information processing controls. What are general controls? General controls are the controls which are generally there over the entire network or over the entire computer. Information processing controls are controls which are specific to information processing, specific to accounting, information processing, to recording of information. Controls which are specific to that, those are information processing control. General control are controls generally over all the other processes. So see general controls. First one, password protection. You having a password on your laptop, I told you, right? That's a logical control. So that's a general control. Password on the laptops and computers. Next, backup. What is backup? Every company will keep backup of some information, right? The data that is stored in their laptops, the data that is stored in their computers, they will keep a backup of that data. They'll keep what? They will keep a backup of that data. in let's say a hard disk, correct? So that if the computer is lost or if the data is lost, then there is a backup present in that hard disk, and from that backup they can recover the data. Next, disaster recovery, recovering of the data when a disaster happens. Virus checks, having antivirus programs on your computers. Restricted access, the access to networks being restricted to specific people, restricted access. And network controls, you're having controls over the network. Great. All of these are general controls. Next, information processing controls. The IT controls, the information technology controls, which are related to information processing, which are related to recording of information or recording of, let's say, journal entries. What IT controls can you have there? You can have batch totals. What is a batch total? It will show you the total number of entries that you've passed. For example, let's say I have to pass 150 transactions. Let's say I have 150 sales invoices. Let's say I have 150 sales invoices in the day. In the entire day, there were 150 sales. So there were 150 sales invoices, and all of these invoices I had to enter in the system. All these 150 sales invoices, I had to enter them into the system. Now, these 150 sales invoices that I'm entering in the system, there will be a batch total. That means after entering all the entries, the batch total should give 150, right? If the batch total is giving, let's say, 148, that means what? That means I made some errors while recording these invoices. I missed out probably on 2 invoices. If the batch total is not matching to 150, it is pointing out that I have made some errors while entering these transactions. The total number of transactions that I wanted to enter was 150, because there were 150 invoices in my hands. But the batch total, let's say, after entering all the transaction, let's say the batch totals is showing only 148. That means what? That means 2 invoices probably I've missed out on recording. I have missed recording the 2 invoices, right? That's batch totals. That is batch totals. Next, sequence checks. Next, sequence checks. What is sequence checks? In the company itself, there will be a sequence which will be going on. The first entry you enter will be number 1. The second entry that you will enter is number 2. The third entry that you enter will be number 3. So you can check that sequence with the serial number of the invoices. The invoices will also have a serial number, right? Let's say the serial number, the first invoice has a serial number 1. Similarly, next invoice serial number 2, next invoice serial number 3. So you can check with the sequence check whether you are entering the correct invoice or not. That is a sequence check. That is what? That's a sequence check. Okay. Next, 1 second. I think the electricity has gone. 1 second, guys. Let me check if the electricity has gone. No, it's still there. Thank God. Yes. The next one is sequence check done. Next one is range check. What is a range check? Let's say while entering the transactions for sales, I know that unit selling price of each item can be between 100 rupees to 500 rupees. I know that every sale invoice, the minimum amount of the sale invoice is going to be 100 and the maximum amount of the sales invoice is going to be 500. If I know that every invoice is going to be minimum of 100 and maximum of 500, I can keep this range in the system. I can enter this range in the system, and whenever someone is trying to enter an invoice amount which is greater than 500, the system will show an error because it will be not within the range that you've put. You've put a range of 100 to 150. You've put a range of 100 to 500. If somebody is trying to enter a transaction which is, let's say, 1000, Why 1000? Probably he has entered 10 by mistake. He wanted to put 100 only, but by mistake he put 1000. Will the system accept that? No, because it is greater than 500. The system won't accept that. So that error will be avoided. Or instead of 200, let's say that person is typing 2000. Will the system accept that? No. The minimum is 100, maximum is 500. So 200 would have been accepted. But this person, by mistake, he has typed 2000. By mistake, he has typed 2000. So the system won't accept that because it is not falling within the range of 100 to 500. So that is a range check. That is what? That's a range check. Next, existence check. Similar to range check, you can have an existence check. What is existence check? All the products that you're selling, all the products that the company sells, those products can be listed in the system. All of those products can be listed in the system. And whenever a sale transaction is being entered, the product which is being mentioned will be checked whether that product exists in the system or not. For example, let's say the company is selling soaps, shampoos, conditioners, and face wash. The company is selling 4 things: soaps, shampoos, conditioners, and face wash. So they've put these 4 items in the system. Now, when you're entering a sale transaction, it should be related to one of these 4 items, right? If you're trying to enter a sale transaction of bottles, will the system accept? No, because bottles don't exist as a product. That is an existence check. Because bottles in your system, it is not mentioned as a product. Excuse me, guys. Bottle is not mentioned as a product in your system. So that is why that bottle will not be accepted, because it does not exist as a product in your system. That is existence check. Next, you can involve authorization. Whatever is being entered by the lower level employee, that will be authorized by a senior person. That is authorization. Or you can have exception reporting. What is exception reporting? Anything unusual which is being recorded during a period, let's say during 6 months, whatever unusual things have been recorded, you can get a report out of that. That's called exception reporting. Basically, a report of all the unusual things which have been recorded. Exception reporting is nothing but a report of all the unusual things which have been recorded. That's exception reporting. These are all information processing controls. Okay. See the right hand side, auditor and controls. This we've already discussed. Read that on your own. Read that on your own, because we've already discussed that. We've already discussed these points yesterday about test of controls and substantive procedures. When we saw the sources of evidence, we said there are 2 sources of evidence. One is test of controls. The other is substantive procedures. Test of controls. In test of controls, you are not bothered with the amount, right? When you're testing the internal control, you're not bothered about the amount involved. You're only bothered about whether the control is operating effectively. Whereas in substantive procedures, when you do substantive procedures, when you do RIO CAR, that's when you're bothered about the amounts in the financial statements. That's when you're checking for the amounts in the financial statements. So read this point. Let me know once you're done. Done? Okay. Now, let's go to the next topic, which is, what does the auditor do with respect to these internal controls? What does the auditor actually do with respect to internal controls? What does he do? He ascertains the system. He gets to know about the system. He documents that system, and then he evaluates that system of internal controls. He ascertains the system. That means he gets to know about the system. He gathers more information about the system. He documents that system. He writes about that information. He's documenting that system in his file, and he is evaluating that system. How does he ascertain the system? See the methods. How does he get to know more about the system of the internal controls or the different systems in the company, like purchase system, sales system, cash system, inventory system? How does he get to know about all of these systems in company? See the methods. He can examine the previous audit work, the last year's audit work he can examine to see what has happened in the last year. Probably in last year also, some things might have been documented. So he can get information from the last year's audit work. So previous year's audit work. Next, he can read the client's own documentation of the system. The client will also have a document about the system, right? About their system. The client will also have their own document of how is their system, the description of their entire system, the description of the various internal controls and the processes and procedures that they follow. A description of that, the client might be having a manual of that, a procedural manual kind of a thing. The client will probably be having a procedural manual, so you can read the client's own documentation. Next, you can interview the client staff. Interview means what? You can inquire. You can interview, inquire with the client staff. You can get to know more information by asking them questions about the system. Next, you can trace a transaction through the system. A walkthrough test. This is nothing but like test data. You've seen test data, right? In the last chapter we just saw, in the last side, under computer assisted audit techniques. Under computer assisted audit techniques, we had seen test data. What did you do in test data? You did a walkthrough test. You put in a dummy data and you saw how is the system processing that particular data. The entire process you saw by putting in a dummy data. So you're tracing that transaction, you're tracing that particular data that you've entered through the system. You're seeing how is the system processing that particular transaction. So that's called tracing a transaction through the system. Next, observe procedures. What can you do? You can do observation. You can look with your own eyes as to what is happening. So you can do observation also in order to ascertain the system or understand about the system. Great. Ascertaining the system is simple. Next, how do you document the system? As I'm telling you that you can put this system in your file, in your audit file, you can write about this system. So how do you document this system? There are different ways for documenting the system. See the different ways or different methods that you can document the system in the form of narrative notes. Is there some disturbance or is there a lag in the voice or in my voice? Is there a lag? Because I think the electricity has some issues. It's going and coming back a lot of times. I hope the class is not getting affected because of that. Is the class getting affected because of that? It's fine? Okay, no problem. Thank you. So the first method of documenting that system in your file is in the form of narrative notes. What can you prepare? You can prepare notes narrating the system. You can prepare some notes narrating the entire system, narrating as to how is the system, and writing the entire description of the system, describing the different processes and procedures, describing the various internal controls of the client. You can form narrative notes. You can create narrative notes where you're basically describing in detail. You're writing a narration of everything. You are describing as to what is the entire processes and procedures and the different internal controls, right? That's narrative notes. Okay, next, organizational chart. And another form of documenting the internal control is the organizational chart. What can you do? You can prepare the organizational chart, the hierarchy of the organization in form, right? Like on the top, there will be what? There will be the board of directors or the CEO and the chairman. After chairman and CEO, there'll be board of directors and audit committee. After board of directors, there'll be different departments like finance department, sales department, marketing department. In finance department, there will be a finance director, then finance manager, finance assistant manager, the staff. So you can look at all of these things and you can prepare an organizational chart. You can do what? You can prepare an organizational chart. Correct? So that is one way of documenting the system, because that organizational chart is going to give you information about authorization also, right? That the lower level employees, authorization will be done by the higher level employees. Authorization is one of the internal controls. Great. So that's organizational chart. See the last one, flow charts. You can prepare flow charts of the system. A flow chart describing the entire system. Or you can have an ICQ or an ICEQ. You can have what? An ICQ or ICEQ. Now, what is ICQ and what is ICEQ? ICQ are your internal control questionnaires, and ICEQ are your internal control evaluation questionnaires. ICQ are what? ICQ are internal control questionnaires. ICEQ are internal control evaluation questionnaires. Both of these are what? Both of these are questionnaires. Both of these are what? Both of these are questionnaires. Now, what kind of questionnaires means what? Questionnaires means you're asking questions, right? You're asking questions. To whom are you asking questions? To the management of the company. In this questionnaire, what are you doing? In questionnaires, what do? You ask questions in the questionnaire, right? So you as an auditor, you've prepared some questions and you're asking questions to the management of the company. It can either be an internal control questionnaire or it can be internal control evaluation questionnaire. Now, what is the difference between the two? Internal control questionnaire, you ask an internal control questionnaire about existence or about list of the controls, about whether the internal control is existing or not. You will ask directly whether one specific internal control is existing or not. The answer is always going to be in a yes or a no form. The answer to those questions is always going to be in a yes or a no form. You're asking directly. For example, let's say you're asking directly that whether the segregation of duties have been done with respect to recording of the transactions and processing of that transaction. Let's say you're asking directly whether segregation of duties have been done between recording and processing of that transaction. The answer will be what? If they've done segregation, the answer is going to be yes. If they've not done segregation, the answer is going to be no. Correct? So you're directly asking whether one specific internal control is existing or not. That is internal control questionnaire. Then what is internal control evaluation questionnaire? Internal control evaluation questionnaire, ICEQ, is not going to directly ask about one specific internal control as to whether it exists or not. It is going to ask the management of how one specific control objective is being achieved. For example, the question can be, how is the company making sure that the theft of cash does not happen at the billing desk? What are you asking? You're now asking, how is the company making sure that the theft of cash does not happen at the billing desk? So what are you asking? You're asking, how is one particular objective being achieved? Now, what should the company do? How will the company answer? The company will answer by describing what kind of internal control have they do they have in place. The company will answer by describing what kind of internal control do they have in place. Correct? That is internal control evaluation questionnaire. That is ICEQ, internal control evaluation questionnaire, right? Where you are asking the client as to how is one particular internal control objective being achieved. They're describing that internal control in their answer. Whereas in ICQ, you are directly asking whether that internal control is existing or not. They will answer with yes or no. But in ICEQ, they have to describe the internal control that they have in place for the control objective that you are asking. For achievement of that objective that we are asking, what are they doing? They need to describe the internal control in that case. That's ICEQ. All right. So that is how you document the system. Okay. Next. One second. Yes. Now, there are some systems which have been given in your notes. For example, like the sales system or sales cycle. There is a purchase cycle. There's an inventory cycle. There's a cash cycle, which are very generic in nature. Which you already know. Like if you see the sales cycle, what are the stages? Stage 1 is you're receiving the order. Stage 2, you're dispatching the goods. Stage 3, you're sending an invoice. Stage 4, you're recording that sale transaction. And stage 5, you're receiving the cash from your customer. Right? This is the sales cycle, right? In any company, this will be the sales cycle. Now, in this sales cycle, the internal controls which you're putting, what will be the objective of those internal controls? In this sales cycle, the internal controls that you're putting, what are the objectives of the internal controls? What should be the objectives of the internal controls? Or internal controls should, what should they make sure? What should be the control objectives? Or what should the internal controls make sure? See, what will they make sure? First one, that goods are only supplied to customers who pay promptly and in full. While doing sales, you should make sure that you're selling goods only to those customers who will be able to pay you. If you think that the customer is not going to be able to pay you, will you sell the goods to him? No, right? So your internal controls should make sure that the goods are being sold, only to those people who we are sure that they are going to pay us. We are sure that they will be having the ability to pay us in full. Next, internal controls should make sure that orders are dispatched promptly and in full to the correct customer. You should make sure that orders are dispatched promptly. Promptly means what? On time. You should make sure that the orders that you're processing, the orders that you're processing, those orders are being dispatched promptly. That means on time. And those orders are being dispatched in full. That means the entire order is being dispatched, not like you're sending only half orders. Next, only valid sales are recorded. Make sure that all the valid sales are recorded. Next, make sure all sales are recorded. Next, make sure revenue is recorded in the period to which it relates. Your cutoff procedures. Make sure that the revenue of this year is recorded in this year. Revenue of next year should be recorded in next year. So all of these things are the objectives that the internal controls of the company will achieve in the sales cycle, in the sales system. All right. So similarly, you can read about purchase. Sales was easy, right? Similarly, you can read about purchase once. You can read about payroll. You can read about payroll. You can read about cash system and inventory. All right. What we'll do now is we'll go and see one question, because I want to show you one question of how questions are asked from this chapter. So let me go to one specific question. 1 second. From your exam kit, I want to do one question. So let me open that. 1 second. Yes. See this question. It's a long case study. It's a long case study that they've given. And this is a constructed response question. This is your section B question. It's not multiple choice question. It is not a multiple choice question. It's a descriptive answer question. Let's see what is this question asking. Whenever there's a constructed response question, whenever there's a descriptive question, what should you do first? Before reading the case study, first see what are the requirements. Remember, whenever there's a case study, whenever there's a question on case study, before going into the case study, what should you do? You should go and read the requirements. As to what are the requirements? What are they asking you in requirements? Because that should be kept in mind while reading the case study. So let's go to the requirements first and see. See, what is required? Required. In respect of the payroll system of Raspberry Company, identify and explain 5 direct controls which the director may seek to place reliance on, and describe the test of control the auditor should perform to assess if each of these direct controls is operating effectively. So what are they asking? They're asking you to identify 5 internal controls from the case study that they've given, identify any 5 direct controls, 5 internal controls, and also for each internal control identified, describe a test of control that the auditor should do. How should you test whether that internal control is operating effectively or not, right? So direct controls and test of controls, any 5. In the question, there'll be more than 5. You just have to give any 5. And next, B, requirement B, identify and explain 5 deficiencies in the Raspberry Company's payroll system and provide a recommendation to address each of these deficiencies. You need to identify and explain 5 deficiencies in the internal control system. What do you mean by deficiencies? Problems in the internal control system. You need to explain what are the problems in the system of Raspberry Company's payroll. And for each of these problems, you have to explain the recommendation. You have to give a recommendation for each of the problem that you're describing. Okay, so basically, we have to identify internal controls, the direct controls, and identify problems in the system, the deficiencies in the system. Great. Now come to the question and let's read what is given. See, read. It is 1st July 2015. You are an audit manager of Grapefruit & Co., the auditor of Raspberry Company. So the client is Raspberry Company. The interim audit has been completed and you are reviewing the documentation describing Raspberry Company's payroll system. In payroll system only, we have to find the internal controls and problems. Raspberry Company operates an electric power station. So it's an electric power station which produces electricity 24 hours a day, 7 days a week. This electric power station is producing electricity 24 hours a day, 365 days, all the days of the year. The company's year end was 30th June 2015. Okay. Let's see what is given about payroll. And we have to identify what? We have to identify internal controls and deficiencies. Okay. Sorry. Let me come back. Yes. Let's read. Read. System notes, payroll. Let's read these notes. Read the first paragraph. Raspberry Company employs over 250 people, and approximately 70% of the employees work in production at the power station. What are they saying? They are saying Raspberry Company has employed over 250 people. There are more than 250 people, and approximately 70% of them are working in the production at the power station. There are 3 shifts every day with employees working 8 hours each. So the employees are working in 3 shifts. The production employees are paid weekly in cash. The production employees are being paid how? These 70% of the employees are being paid every week and they are being paid in cash. The remaining 30% of the employees work at the head office. The remaining 30% of the employees are working at the head office in non-production roles and are paid monthly by bank transfer. So the remaining employees are being paid monthly by a bank transfer through bank. Only those 70% of the employees are being paid by cash. Okay. This is just description, right? There's no internal control involved here or there's no deficiency. This is just description. Let's get to the second paragraph. Read that. The company has a human resource department. The company has what? The company has a HR department responsible for setting up all the new joiners. So the company has a HR department which is responsible for setting up all the new joiners. Pre-printed forms are completed by HR for all the new employees, and once verified, a copy is sent to the payroll department for the employee to be set up for payment. So there are pre-printed forms. Those pre-printed forms are being completed, and those pre-printed forms are being verified and sent to the payroll department, and that payroll department will be setting up the employee for payment, for paying of wages and salaries. That payroll department is setting up the employee in their system. Read further. This form includes, that means the pre-printed form includes the staff member's employee number, and payroll cannot set up the new joiners without this information. The payroll department will not be able to set up any new people without this information. What do you think this is? Is this an internal control? Is this a deficiency in internal control? And if you think that there's an internal control, what internal control is there? Which point is talking about internal control? Now, I know this is the first time you're looking at such questions. So that is why identification for you might be difficult, right? So you listen to me very carefully so that you understand how do you identify the internal controls. Since this is your first time, it might be a little difficult. Once you get used to it, once you see a lot more questions, it will get very easy, right? Okay, let me explain what is happening here. See what is happening here. Here, segregation of duties have happened. Here, what has happened? Segregation of duties have happened. Why? Because there's a separate HR department and there's a separate payroll department. There is a separate HR department which is responsible for setting up the new joiners. There's a separate payroll department who is setting up the employees who have joined the organization for payment, right? There's a separate HR department. There's a separate payroll department. So there's segregation of duties. Only one department has not been given the entire responsibility of setting up the new joiners also and paying those new joiners also. What has the company done? The company has segregated the duties between the two departments, the HR department and payroll department. So that is one of the internal controls, right? That's one direct control that you've identified. And another direct control or internal control from the same paragraph is those pre-printed forms. Those pre-printed forms which are being filled by HR department, those are being sent to the payroll department. And without these forms, the payroll department cannot set up any employee for payment. That means what? That means this is avoiding frauds, right? This is preventing frauds. What kind of frauds? The payroll department, let's say they want to set up some fake employee so that they can make payment to those, so that they can show as if they are making payments to those fake employees, but they're actually not making payment to that fake employee. That money is going in their pockets. They're stealing that money. What is happening? Let's say the payroll department wants to set up some fake employees who don't exist, who are not working for the company. They want to set up those employees because they want to show as if those fake employees are being paid salaries and wages, and those salaries and wages amount will go to their own pockets. They will steal that money. Can the payroll department do this when there is a HR department and there's pre-printed forms? No, right? The payroll department by themselves, they cannot set up any employee. For setting up any employee for payment, they need what? They need a pre-printed form, a filled up pre-printed form from the HR department. The payroll department alone cannot set up fake employees or fictitious employees. So that is what then? Those pre-printed forms are again an internal control. They are a direct control. They are a direct control, right? That's again an internal control. And what should be the test of controls for these two internal controls? Because in the question, they're also asking you, how will you test these internal controls? Testing these internal controls means what? Testing whether this actually happens in reality or not. Whether these internal controls are operating or not, and whether they are operating effectively or not. How will you test that? For segregation of duties between HR department and payroll department, for that direct control, what can be the test of control? You can go read the procedural manuals of, or the roles and responsibilities of the HR department and payroll department. You can go and do what? You can go and read about the procedural manuals, about the procedures, about the roles and responsibilities of the HR department and payroll department. Correct? You can inquire with people. You can do an inquiry with people in the HR department and with people in this payroll department as to what are their responsibilities. So that you get to know that there's segregation of duty actually in reality also. And for those pre-printed forms, what can be the test of control? You can select a sample of the pre-printed forms and verify them. You can select a sample of pre-printed form and verify them to see if that is complete or not, to see all the details have been filled in or not, to see if it has been verified or not, and to see whether the same person has been set up by the payroll department for payment or not. So you can do a test of control like that for pre-printed forms, right? So you've identified 2 controls already. How many you need? You need 5 in total. Okay. Next, let's read the next paragraph. To encourage staff to attend work on time for all shifts, Raspberry Company introduced a discretionary bonus paid every 3 months for production staff. So to encourage the staff so that they attend work on all time, Raspberry Company introduced a discretionary bonus. They introduced what? They introduced a bonus scheme which will be paid to the production staff. Read further. The production supervisors determine the amounts to be paid and notify the payroll department. See who is determining the amount of bonus? The production supervisor. What is this? This is a deficiency. This is a deficiency in internal controls. Why? Because you're allowing the production supervisor to decide the amount of bonus to be paid. You're allowing what? You're allowing one person, you're allowing the production supervisor to determine the amount of the bonus to be paid. What will he do? he can do frauds, right? What kind of fraud? He will try to pay more bonus to the to people who are his friends, who are his colleagues, who are his relatives, who are his personal relations. The people in the company with which he has personal relationships, that production supervisor will try to pay those people more bonus. Will try to pay those people more bonus. So that's a deficiency. That is a deficiency. What will be the recommendation for this? The recommendation for this will be that the production supervisor alone should not decide the amount of bonus. The board of directors should have a formal policy for bonus, first of all. The board of directors should have a formal policy for the bonus, and the bonus should be determined by the board of directors based upon that policy. There should be a policy, a proper policy for determination of the amount of bonus, and the board of directors should decide the bonus basis the policy which is formulated. That is the recommendation for this problem of production supervisors deciding the amount of bonus. Next, this quarterly bonus is entered into the system by a clerk, and each entry is checked by a senior clerk for inputs error prior to processing. You tell me, what is this? Is this a direct control or is this a deficiency? Only this line, this quarterly bonus is entered into the system by a clerk, and each entry is checked by a senior clerk for input errors prior to processing. What is it? Is this a internal control or is this a deficiency? Quickly. This is what? This is an internal control, right? This is an internal control. Why? Authorization is happening. Yes, very good, Vandita. This is an internal control, authorization. The work of the lower employee is being checked by the senior employee. Of course, this is a internal control. So third internal control you've identified. Next, the senior clerk signs the bonus listing as evidence of undertaking this review. The senior clerk is reviewing every entry, so that he's also signing. He's also signing that bonus listing. What will be your test of control for this internal control? You should select a sample of the bonus entries which have been made, and you should trace it back to see whether it has been authorized by the senior or not by checking his signature. By checking whether his signature is present or not. That is how you can test whether that internal control was operating effectively or not. Okay, that's a test of control. Next, let's go to the next paragraph. Production employees are issued with clock cards, and they are required to swipe their cards at the beginning and end of their shift. This process is supervised by a security staff 24 hours a day. Each card identifies the employee number and links into the hours worked report produced by the payroll system, which automatically calculates the gross and net pay along with relevant deductions. See what is happening? Every employee in the production department is given with a clock card. He has to swipe that clock card at the beginning, that means when he enters the company, and at the end, that means when he leaves the company. He has to swipe that clock card. And this clock card and this process of swiping is being supervised by a security staff 24 hours to make sure that no unauthorized access happens. To make sure that nobody who does not have that clock card enters, there's a supervision done by a security guard. Also, this card links into the hours work report by the payroll system. This card that the people are swiping, that will record the number of hours also, right? The in time and out time is there. If in time is 10 o'clock and out time is 5 o'clock, that means the employee has worked for 7 hours that day. So all the hours worked are automatically captured by that clock card, and it is being sent to payroll department automatically, which is calculating gross pay and net pay depending on the number of hours worked. That clock card is giving the details of number of hours worked, because that clock card has in time and out time. So it will give the number of hours worked to you, and depending on that number of hours worked, the payroll system is automatically calculating the gross pay, the net pay, and the deductions. Basically, the gross pay minus deductions is net pay. What kind of deductions? What do you deduct from the salary? You deduct income tax, which is TDS. You deduct income tax, right? TDS. So TDS is being calculated. Provident fund is also deducted. The amount that is to be contributed to provident fund, that is also deducted from the salaries. So all of those deductions are also being calculated. So of course, this is an internal control. But see, these calculations are not checked. What is this? These calculations, which is automatically done by the computer, these calculations, they are saying that they are not checked. These calculations are not checked. What is this? This is a deficiency. It's a deficiency. It's a problem that yes, the gross pay and net pay is being calculated automatically, but still it is the responsibility of the management to see whether those calculations have been done correctly or not. Or are there any mistakes in those calculations? Okay. So these calculations are not checked as a deficiency. It's a problem. Next para. Next para is interesting, and we have to read the entire para in order to understand what is happening. Read. In addition to tax deductions from pay, apart from the TDS that is being deducted, some employee wages are reduced for such items as repayments of student loans owed to the central government. So from the salary of the employees, apart from TDS, one more thing is being deducted, and that is for repayment of the student loan that the employee has taken. The employee, when he was doing MBA, he must have taken a student loan, and that student loan is still pending, and the employee has to repay the principal back, repaid in installments, repay that principal back in installments, right? So from the gross pay, an amount is being deducted, and it is directly being sent to the central government for repayment of that student loan. Basically, for payment of that student loan in installments only, right? So in addition to TDS from some employees, this amount is also reduced with respect to repayment of the student loan. Okay, read further. All employers have a statutory obligation to remit funds on a timely basis and to maintain accounting records which reconcile with annual loan statement sent by the government to employers. They are saying that all employers, they have an obligation to give funds on a timely basis to the central government, and they have an obligation to maintain accounting records. Great. Read the next line. At Raspberry Co, student loan deduction forms are completed by the relevant employee. So the student loan deduction form is completed at the start only with every employee, by every employee, and payments are made directly to the government until the employee notifies the HR that the loan has been repaid in full. The last line is very important. The last line is very important. So they are making the payments directly to the government until the employee notifies them that the loan has been paid in full. What do you mean by that? For example, let's say an employee has taken a loan of 1 lakh. Let's say an employee has taken a loan of 1 lakh, and let's say that is repayable in 4 equal installments. That 1 lakh loan, let's say it is repayable in 4 equal monthly installments, EMI. Now, the company is not seeing, the company is not tracking how many installments have been paid. If 1 lakh is outstanding, how many months' salaries should be deducted? First month salary, 25,000 deduct. Second month salary, 25,000 deduct. Third month salary, 25,000 deduct. Fourth month salary, 25,000 deduct. Should you deduct in fifth month also? No, right? But what is the company doing? The company is deducting in 5th, 6th, 7th months also, until and unless the employee comes and tells them that the loan has been repaid in full. So what is this? This is a deficiency. Because why is the company waiting for the employee's intimation? Why is the company waiting for the employee's intimation, for the employee's notification for the loan to be paid in full? They can themselves keep a track, right? The company itself can keep a track that yes, 4 months EMIs have to be paid, and after 4 months, automatically you should not be paying that EMI in future. It should not be continued. It should not be continued. So the company themselves should keep a track of that. You should not wait for the employee to tell you. You should not be waiting for the employee to intimate you that the loan has been paid in full. Correct? So that's a deficiency. Okay. Let's go next para. On a quarterly basis, exception reports relating to changes to payroll standing data are produced and reviewed by the payroll director. What are exception reports? Anything unusual which has happened. Anything unusual which has happened on a quarterly basis, that report is sent to payroll director. He reviews that also. There's a review happening of that exception report. So of course, this is an internal control. Next, no overtime is worked by employees. Employees are not working overtime. They're only working for 8 hours. Employees are entitled to take 28 holiday days annually. In a year, the employee is entitled to take 28 days holidays. Holiday request forms are required to be completed and authorized by relevant line manager. So the holidays can be taken how? You need to fill up a request form, a holiday request form. You need to complete that. You need to fill up that, and you need to get the signature of the relevant line manager. The relevant line manager should authorize your holiday request form. But see, however, this does not always occur. There is an internal control like that, but it is not occurring. That means what is this? This is a deficiency. This is what? This is a deficiency. This is a problem that the holiday request forms are not being authorized by the relevant line managers. What should be your recommendation? Your recommendation should be that every employee who wants to take a holiday should fill up the holiday request form, and every holiday request form should be approved or agreed or authorized by the relevant line manager. Okay. Next, on a monthly basis, for employees paid by bank transfer, the senior payroll manager reviews the list of bank payments and agrees this to payroll records prior to authorizing the payment. See what is happening? Every month, the employees are being paid by bank transfer, right? The rest 30% employees. 70% employees are being paid in cash. But the 30% employees who are being paid by bank every month, what is the senior payroll manager doing? The senior manager is reviewing the list of bank payments and matching that to payroll records. Whatever amount has been calculated as per payroll records, only that should be remitted, right? Only that should be sent to the employee as a bank payment. So what are you doing? You are reviewing. The senior payroll manager is reviewing the list of bank payments and agreeing this to payroll records prior to authorizing the payment. And read further. If any errors are noted, the payroll senior manager amends the records. What is this? This is again a deficiency. You should have two different people, right? One person should review and another person should correct if there are any errors noted. One person should find errors, one person should review, he should match the list of payments with the payroll records to see if the amount is matching, the amount of payment, whether it is matching. You can check that with the pay slip. The pay slip of every employee will describe what amount has been calculated as net salary, right? Net amount of salary. So that is being, every payroll invoice is being, every bank payment is being checked with that payroll invoice, sorry, pay slip. Every list of the bank payment, before making the bank payments, a list of bank payments is being written down. That list of different bank payments is being checked with the payroll records, is being checked with the payroll in pay slips to see if the amount matches. So that is an internal control. That checking is an internal control. But what is happening? If any errors are noted, the payroll senior manager is only amending the records. The same person is amending the records. That's a deficiency. Okay. So see, we are finding more than 5 internal controls and more than 5 deficiencies. Whichever you are perfect with in the exam, you write them. You write whatever you are perfect with. There are answers also for this question. For this question, there's an answer also. I will show you that. Don't worry. Read the next para. For production employees paid in cash. The previous paragraph was for the employees which were being paid by bank. Next paragraph is for the production employees being paid in cash. What is happening? The necessary amount of cash is delivered weekly from the bank by a security company. How is the cash being transported from the bank to the company? The cash is being transported by a security company. What do you mean by a security company? There's a third party service provider. There's a company who's providing services for transporting of your cash in a secure manner. You're taking the services of that company so that the cash is not lost while you're traveling. While you're transporting the cash from the bank to your company, so that the cash is not lost, what are you doing? You are taking the services of a security company. You must have seen, right, on roads. On roads, you must have seen this van type of a vehicle. This van, a van type of a vehicle, which has a lock, a big lock behind. What is that? That is nothing but a security company transporting cash. Correct? So this company is taking the help of a security company. What is it? That's an internal control. That's a direct control. Because of that security company, the thefts are being avoided. Frauds are being avoided. So that security company, the services of a security company is a direct control. What will be your test of control? Remember, always, whenever you see a security company in the question, the test of control is going to be the same. What is going to be the test of control? How will you test whether the security company is actually there or not, is actually giving services or not? If the security company is giving services, they will raise an invoice also, right? If the security company is giving services, they will raise an invoice also, right? So that's the proof. So you can get sample of security companies' invoices that has been raised on this company. Because this company has to make payments for the security company services. That means security company has to raise an invoice. So check whether those invoices are present. That is one test of control. The second test of control that you can do is you can observe. Whenever the security company is delivering the cash at the premises, you can observe that that security company has delivered or not. So you can use observation as a test of control, and you can use inspection of the invoices as another test of control. The invoices which have been raised by the security company, because that is a proof that yes, the services of security company are being taken. Then only they will raise an invoice, right? Read further. Two members of the payroll department produce the pay packets. One is responsible for preparing them. The other the other checks the finished pay packets. See what is happening? There are two people from the payroll department who are preparing this pay packet. What do you mean by pay packet? Every employee who's being paid in cash, the cash is given in a packet, right? The cash is given in a packet. Different packets will be made for different employees. If there are 100 employees, there'll be 100 different packets. So two people from the payroll department are making these packets. One person is producing this packet. One person is preparing this packet. Another person is checking whether it has been done correctly or not. So what is this? What is this? This is, of course, a direct control. It's an internal control. One person is producing the packet, other person is checking that packet. So this is what? This is a direct control. It's an internal control. Correct? Okay. Read further. Both members of the staff are required to sign the weekly payroll listing on completion of this task. When they complete this task, they have to sign also on the payroll listing, on the list of the payroll. Next, the pay packets are then delivered to production supervisors who distribute them to employees at the end of the employee shift as they know each member of their production team. What is happening then? The pay packets are being prepared by the payroll department. Then those pay packets are being sent to production supervisor, and that production supervisor is distributing the pay packet. What is this? What do you think? What is this? What do you think? What is this? This is a deficiency. This is a problem. Why? The pay packets you've prepared and then you're sending it to production supervisor. What can that production supervisor do? The production supervisor can manipulate those pay packets by removing some cash from one packet and putting it in another packet. Let's say he wants to pay Ram less, but he wants to pay Sham more. What can he do? From Ram's packet, he can remove some cash. He can put that cash in Sham's packet. You're allowing the production supervisor to distribute it. So that's a deficiency. What should be your recommendation? Your recommendation should be that people from the payroll department only should distribute the packets. Why are you delivering it to the production supervisor? People from the payroll team only should distribute those pay packets, because production supervisor will do what? He will try to give more cash, more packets to the people, to the people who are his friends, with whom he is having personal relationships. So rather than you giving that packets to production supervisor, payroll department itself should distribute those packets. Two people from payroll department. Two people from payroll department. Clear? Did you understand how to identify controls, how to identify deficiencies? See, I'm showing you the answer also. Look at the answer. How are they writing the answer? See, they are writing direct control and test of control, the internal control and test of control. The answer is also there in the same file. In the exam kit only, after questions, there are answers also. So please refer to the answers. Today, do this homework. Today, do this homework, read this question and read the answer. Read the answer to see how do you write your internal controls? How do you write your test of controls? All right. So read this answer, the entire answer you can see. How do they test controls? See, then deficiencies and recommendation. Remember, in deficiency, describe the deficiency first and also write the effect of that deficiency. What is the problem? What is the effect of that problem? Then give recommendation. Describe that deficiency, write the problem of that deficiency, the effect of that deficiency, or what is the problem because of that deficiency, and then write the recommendation. Similarly, in direct control also, describe the control, then write what is the objective of that control. What are you achieving out of that direct control? Correct? See, for example, read that segregation of duties. First, they are describing the control. They are describing pay packets are prepared by two members, with one preparing and one checking the pay packets. And this is evidenced by each staff member signing the weekly listing. What is this? This is just describing the internal control. Direct copy paste from the question, right? In the first para, you will just describe the control. In the second para, write what is the objective of that control. What is that internal control achieving? What is happening because of that internal control? What's the control objective? Read. What is the objective? This ensures there is segregation of duties, which prevents frauds and errors not being identified, which could result in misstatement. Correct? That's the objective. Segregation of duties is the objective, which is preventing frauds and errors. and then write test of control. How are you testing that internal control? So they are writing about observation. You can go and observe the preparation of the pay packets. And next para, they are writing about inspection. You can inspect the weekly payroll listing to see whether they have signed or not. Because it's given in the question that they are signing the weekly payroll listing. Clear? Did you understand how to write your answers? So apart from this, there's another question that I want you to do from the exam kit as a homework. So please note this down in your books. Please note this down in your books. The question number, one second, let me open that question number. Question number 223, Caterpillar. Please note this down. Question number 223, Caterpillar, at page number 115 of exam kit. Page number 115, page number 115, question number 223, Caterpillar. Page number 115, question number 223, Caterpillar. Page number 115. So do this question as a homework. Read the question. It's similar question. In this question also they are asking to identify direct controls, identify the deficiencies. So read this. Please read this question. Read the above question also of Raspberry. So Raspberry and Caterpillar, both of these questions, the question that we did in class, read that also as homework and read this also as homework. The answer for this also is there. Should I give the page number of the answer also? Question is at page number 115. The answer of this question is at page number 345. The answer is at page 345. All right. So please do these things. Do these questions as homework. At page number 115, there's a question about Caterpillar company. Do that question. And then I will see you now next on Monday. We don't have our class tomorrow, right? Saturday, we don't have a class. We have a class directly on Monday. So I will see you guys on Monday, same time, 9 o'clock. And we will, this chapter is over. Internal controls is over. We will start the next chapter on Monday. So bye-bye. See you. Thanks a lot. Thank you for joining. Have a good day ahead. Oh, your college is reopening, is it? Is your college reopening? Okay, so I'll discuss with the coordinators as to what to do about it. I will see how can we take this further. But internal controls chapter is over. We will see how to take the rest of the chapters. When do we take that? Okay. So thank you guys. Thanks a lot. You'll be informed about your further classes. Thank you.